Hello everyone, Cory Mitchell here with TradeThatSwing.com, and first day trading day of the year for me, and yeah, do a little video diary, things I liked, things I didn't like, things I'm working on. Last night I was journaling and I posted a thing on Twitter, now X I guess. Let's see if I can drag that over here. So this was kind of I wrote about 2 or 3 pages of notes to myself, just kind of reinforcing some things, and this kind of stuck out to me. And this is kind of how I ended it off, where I basically wrote to myself, like, you do all this work outside of trading, right? You work on your strategies, you work on your discipline, you work on your mind frame. And I had this kind of idea that, trading, you're the CEO, you're the engineers, you're the researchers outside of trading hours. Those are the high paying jobs. And while you're sitting in front of that platform, you're the minimum wage employee. You don't get to exercise your creativity or how smart you are. That's done outside. But in order to make the money, that frontline minimum wage employee needs to execute the plan that the brains have come up with. So I kind of had this little epiphany, and it's like, just kind of be a brain dead idiot while your platform's open. Like, if you don't recognize it, don't trade it. No exit, stay in it. Exit, get out. And this really stuck to me because I'm definitely a thinker type person. Like, the wheels are always turning. And you can end up out thinking yourself or thinking too much. And I just kind of thought, like, don't be thinking about anything else other than this. Like, be just kind of brain dead out there. You're not smart enough in the moment to change anything. So, we've come up with this, kind of a new plan that I'm trying to implement, and it's, just kind of be the brain dead idiot out there that just does what you're supposed to. Because, a lot of times I'll like really be thinking and, grinding through the session, I guess is a good word. I'm just like constantly like grinding every little tick, just thinking about what I should be doing, and that's not really needed because that's all been planned out. So this trade I did really well. We'll talk about that one. So when I say be dumb here and be dumb here, what I'm basically saying is you tried to outthink or you changed something. So here I just kind of decided, well, I'm just going to take a, quick profit. And here, it just went like a couple cents against me, and I'm like, I don't want to take a loss. I'll just get out. So just be dumb. If I would have just followed my plan, if I wouldn't have been thinking, I would have ended up with a bigger gain here, and I would have ended up with a bigger gain there. So, let's go through those. There was an opportunity to get in there, which I missed. So, look at these were all kind of similar type setups. Even this one, I didn't like how whipsawy this was. It just didn't come across as clean to me. It still would have been a good trade. But anyway, so there was a little range that developed, right, in the morning. And then it breaks out, and it holds outside that range. Look at here. Little range develops, breaks out. This pullback holds outside that range, and we get the turn. So all the entries that I've always been using are the same. The TCs, the double pumps. But this, I like that. This is what I classify as my range rules. When you have a range and it breaks out, I like those trades where it holds outside. If it doesn't hold outside and it goes back into the range, that's more likely a false breakout. So this one breaks out, pulls back, holds outside. You get a trigger outside. That was a really nice one. Basically the exact same trade on this one. So little range forms in the morning, nice breakout, pulls back, comes a tiny bit into the range, but then you get the rollover and you get a trigger outside the range. So it's basically giving you that confirmation that this breakout has so far succeeded. And you can see, so I trailed there, kept dropping, trailed there, got 25% out there just because it was a bit of a volume spike. This one, it was more of a gradual rise. Like we go from pretty low volume and then we just been kind of escalating. And that was the biggest volume we'd had in a while. It was quite onside, so I took 25% of the position off. And then another 25% got taken off on that volume spike. And it's just, as soon as that kind of volume spike appears, I'm just throwing out a limit order right then and getting some out. And then the rest got trailed out above this little swing high. So that was a overall really nice trade. I was happy with that one. This one, so I didn't get 25% out. That was my note to myself after that. I could have got some out on this big volume spike that occurred here. But instead, I just kind of went for a small profit. I think it was like I ended up with 1.5R or something, which wasn't bad, but I kind of overthought it and could have made more because we ended up having this, little ledge here, tries to go lower. So probably could have been out somewhere up in here and would have had some off quite a bit lower. This one, same thing. So this one, really nice run to the upside. And I like to see this. This was just a little bit too low. So nice pop. And if this would have occurred maybe up near the highs, I probably would have been in it. Or ideally, this was more of a range and then this pops out. I probably could have got in there, but it just wasn't quite enough of a clearly visible pullback. Not sure why I wasn't in this. I think I was just a little bit distracted because this occurred right while this kind of choppy period was going on. And I was just kind of watching this, like waiting to see if it would drop, and then I could move my stop loss down. And so I was just a little bit distracted, missed that, but that was a pretty nice, like pretty hard tumble. But what I like is there's this little tiny pop, and then you get that little second push down, which can't really go anywhere. And in a really strong stock, you get that move up. So that would have been a pretty good entry point there. Then the stop loss would have got moved up below there, probably below, so probably would have got trailed out somewhere in here. But either way, would have been a little bit of money there. I ended up getting in here, and again, like I said, I overthought this one. It pulled back very briefly, and I just got out, and I was like, it's not going. And that was dumb, because this is one of those ones where it's, we had some other choppy kind of periods, and then once it goes, it just goes. And that was the kind of day it was. It was like, you might get a little bit of sideways, but in these bigger moving stocks, when they go, right? And you kind of got to be there for it. Tiny loss there, and probably would have only ended up flat. But you kind of add up all the mistakes, and it's like, okay, I would have ended up with maybe extra half R to an R here. Would have ended up with an extra half an R there. This one, I like this one. This was, just kind of a big double pump type setup. And looking at, so I'm going through, I'm doing more research at night. There still tends to be quite a bit of crossover with the best day trading stocks list. But I am going through and I'm looking for stocks that have the potential to pop, kind of like what happened today. Now, we had a bit of a sell-off in some of the AI quantum computing names. Like, it was a pretty good day on the market today. I don't know what we ended up. Yeah, like NASDAQ was up over 1%. And quite a few of these were down a little bit or flat. Or gapped higher and then rolled over. So, but there's still, these are like the daily ranges in percentages. So the average on PDYN, 29%, almost 30% a day. That's intraday. That's between the open and close is how much it's moving. This one, 24%. This one, 25%. So even if maybe we don't get the directional move that we're looking for, which is, I would say, kind of the easier trade. It's like you've seen the bullishness on the daily chart and then you get the pop. We've talked about it in prior videos where you get this like little pocket pivot, I call it, or basically it's a TC on the daily chart. So strong move up, clean pullback, and then you start moving above a prior candle high and you get a nice pop. In this case, but if it just keeps moving down, that's also tradable, right? So these are the daily charts that I was looking at, and they don't always run. Like Curl there opened just above that little pocket, so it had that potential, but it just couldn't gain any momentum and it rolled over. So PDYN, we still know it's likely going to move 20% on the day. So even though it went down, and I was kind of looking at it as a bullish setup, we know it's in a pullback, so it could go either way. I'm willing to accept that, but we wait for the confirmation. So in this case, you know, it was below VWAP and below the range. Again, VWAP, it's on there right now. I'm still, I think I do find it a little helpful, which is why I'm keeping it on there for now. But I will need a broader range of trades to go back and look at and see if maybe I ended up missing a few things because it was on there. So it's still a bit of a question mark for me, but for now it's staying on there. But yeah, to me this was, even though we had gapped up, we'd broken below the range of the morning, and this was a nice clear signal. This one, nice clear signal. And the daily chart on that one, yeah, still, you know, still in the pullback basically. Anything else to say about this? This one, so this was basically the big double pump. I can't remember. Maybe that's where I went off on a tangent there. Because I was talking about this double pump. It breaks up, and I let this go a little too long. So the idea, if we apply the kind of range rule idea, right, is that now once this breaks out, ideally this pullback might pull back in a little bit, but then it should push out quite quickly. And I overthought it. I was thinking, okay, maybe we'll just give it a little bit of extra room. But really, like once it kind of made that push up, that should have been about it. My stop should have been about there. And again, not a huge difference, but again, maybe half an hour. And, you know, just in a day, a couple mistakes like that cost me about 2 hours over the course of a week. You know, if you're kind of doing that every day, that's a lot left on the table. And the main takeaway was that if I'd just kind of been dumb and just kind of followed the rules like a chimp, just, you know, be a brain dead, okay, follow the rules, yeah, I make more. So yeah, that's overall, I'm happy with the day. Like I executed this one really well, pretty much textbook how I wanted to. And maybe that was taking up a bit more of my brain capacity, and I couldn't quite fully utilize my brain on these other ones. But yeah, not a bad day to start the year. Anyway, these are my own notes. Take from them what you will. Again, like I said, it's kind of my trading journal. And yeah, if you can get something out of it, great. But if not, hey, it's more just for me to kind of reinforce what I need to do and remind myself of a few things, like just being dumb. It's okay to be dumb. Follow the rules. Don't need to outthink it. And yeah, try to do better tomorrow.